Welcome, everyone, to Inside Traders. Welcome, scalpers, traders, swingers to the show. This is a finance show where we talk about what the smart money is doing and learn from them. I'm featuring my portfolio in the background here, as you can see right there. And this is a special episode. I'm going to dive into some live trades that I made today and show you some mistakes, some real bad trades. But then we're also going to talk about some good trades that the insiders made, kind of like the flow and what people are buying and selling, and then just kind of go over a couple of charts to illustrate kind of like how these trades happened. My name is Caleb. I'm your host, and welcome to the show. So let's start by just looking at the flow. We opened pretty strong today, and it was kind of like I spent this weekend doing a lot of prep to trade, and so it's a little disappointing to have made some really simple mistakes in my trading. What I expected was a big pop up into open and then a retest of the lows. And that's exactly what happened. I did not capitalize on it because we'll get into why later, mostly trading psychology, which is why we're here and to get better at this stuff. And so hopefully you guys can learn from my mistakes and I can illustrate how easy it is to turn a winner into a loser. That's why I'm here. I'm here to show you guys how to turn winners into losers. And so let's start with the winners and the losers of today. So NVIDIA getting called up massive premium into NVIDIA. They had a pretty good day. I don't think nothing crazy. They went down in the morning and kind of like had some recovery, pretty similar to Tesla. Tesla was getting put pretty hard except into close. One of the things that I love about following these guys, the inside order flow, is I do get my best performance when I am like generally trading along with the market. My best trade today was putting Tesla, and that trade came from watching a bunch of like orders just come in on like waves of puts on Tesla. And I was like, I'm going to hop on the put train, and that one trade alone kind of like saved the day or whatever. But it's this is a tough game. It's tough because it requires so much focus and attention. And I don't think discipline is the right word, more like an understanding of your own psychology. Because like when we see this, let's go to let's get rid of all these lines. So when we're like right here, right? And we just like had this big run up. If you weren't into Tesla and you see this big green bar from like 238.5 to like almost 239, you're going to want to buy. And like, that's the exact wrong time to buy. And like, that's when you sell calls. That's when you buy puts. And when do you buy? You buy when you have a good reason to buy. And a good reason to buy would be, we are like below the lows of the day, but still in an upward trend on the 5 minute, well, maybe not 5 minute, but maybe like the hourly chart or even longer. We're still in an upward trend because stocks, from my observation, are always, obviously they're always going up or down, right? But when they're going up, they're always testing the lows before they go up to the next high. And while they're going down, they're always trying to break out to the high before they test the next low. And it's in that moment of like inversion, almost like when you're like, if you're down, if you're going down, you want to capitalize on the up move. And if you're going up, you want to capitalize on the down down move. And then also you just get like these really, one of my biggest problems with trading is not just letting things go, right? Just like let it freaking go. And right here, like in the morning, like let's go back to Tesla. So exactly what I thought would happen, we gap up and we have this like top here, a crazy peak. 244, you wouldn't have had time. Like this is like the first 10 seconds of trading. And we immediately get shoved down all the way to here. So this is like what, like not even 20 minutes into trading and we're breaking into new lows. 237.18. So like in my mind, that was actually a pretty good like place to buy. Now we go up, 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 up. And when we are, like peaking here, I like to go back and like look at something historical. Like let's just draw a line here, right? So there's like a big red line right there. You see how that line is up with all of this previous stuff? Not perfectly, but like generally speaking. If we take this segment, and now we can look at this retroactively and see where we would draw the line. But if you have your lines drawn beforehand, you can kind of get an idea of where there is support and resistance. And where are you going to find support and resistance? Well, you're going to find it where, oh yeah, there's my portfolio. You're going to find it where the most price action is happening. So if we look at these dark pools, okay, massive print. Wow, 2.1 billion. What was the strike? 439.97. 439.97. Where was that? 439. Interesting. Usually, oh, it's right there. There's the level. Usually they line up better with things, but you could even see right here on this, like here we're below, we're trapped in the box. We try to break out. We can't break out. We do break out. We're above the box. Anyway, like you can this is on a 2-week scale, but like you can kind of see how these lines intersect the price history, and they give you a clue as to what might happen. And if you combine that clue with all these other indicators, then I think you actually do have a decent shot of making money trading. But to do that, we have to overcome our own psychology. And it's primarily a fear-based psychology. And there's 2 types of fear in trading. The fear of like, I'm going to get fucking liquidated in 2 seconds here, and the fear of missing out. And being on the wrong side of either of those is going to get you to sell at the bottom or chase it to the top. And where the traders make money, where you really make money, is in that fraction of a second of peak fear or peak euphoria, and you do the opposite of what the market is doing, and you're right. So like if all the market is buying, you're selling. If all the market is selling, you're buying. But like you're not going to want to do the opposite in that moment. Your instincts, your gut, your feeling, everything is going to tell you to like to chase the stock all the way up. And so that's a lot of what I think I would like to like discover more of from other people, like how they have worked through their own psychology in these things. And I'll show you some of my trades later where this is like perfectly exemplified. I believe I'm still I'm working on a tool that will automatically calculate my profit and loss for the day. And that's why I'm late today. Like I was trying to get it done in time, but I only got about halfway there. And so I think it's really important to try to like learn from your mistakes and dig into the data to identify your own behavior. Now, as far as I can tell, now that I've dug in, I am still up on the day in my trading, although I have a bunch of like languishing calls that are just like burning my portfolio. There it is. And that's like another thing to learn is like you do not want to be holding calls in a sideways market. You don't want to be holding calls unless the market is like going up and fast. And I'm really trying to learn from the tape here on how these guys enter and when they exit. Now, the problem with the tape is like we don't know the other side of the trade. My suspicion, based off of doing this kind of trading for like not that long, maybe a couple of months now, maybe even less, is they are probably holding these contracts for like minutes at a time. They're in, they make the premium, or they cut their losses and they're out. And like, I'm a hodler. Like, I'll hold until the freaking sun explodes. And that's not how the professionals do it. That is not how they do it. They're in, they're out, they make their money, they get their cheddar, they get the bacon, and they feel good. And that's what we want. We want freaking bacon. And so how are we going to get there? Well, we're going to learn from our mistakes. So let's go over some trades. So this is, let's get this screen here, go there. Let's see. So this is all fake numbers. None of this is real, but like just pay attention to two things. One, when I buy, and two, the unit quantity that I buy in. And that is going to completely define the trade. My entry and my units and my exit and my units define the trade. And so what is this, a good trade or a bad trade? This is a bad trade. And so like you could see like one of the things that I'm trying to learn from is just sorting by different things. So if we sort by time, we can kind of like go through, this is like my trading behavior with fake numbers, but still behaviorally, directionally accurate. So like, oh my God, he sells, was that the highest quantity? Dork, dummy, why? So like, this is what I'm talking about. I know all this stuff. I spent the weekend like building tools and preparing and coding, and yet like when it came to the moment, I still sold at the bottom. And why? Why sell at the bottom? Look at this, 9:42 a.m., plenty of time left in the day. Like I'll sell if it's like 12:30 and I'm like, we're not going to get enough momentum to get over the thing. I think that is an appropriate time to sell. At 9:42, like there wasn't, that day had just started still. Like we were just closing the first session. If anything, sell calls above this, open a credit spread. I'll talk about how to deal with what all that shit means later, but it's incredibly useful. And then hold on to these. But this just shows you can know what to, there's a big difference between knowing what to do and actually doing it consistently. And so, yeah, like the sell here is pretty egregious. Now, like, let's look at a couple other sorts. What is this? 10. Yeah, like, and this buy is egregious. Look at this buy. Like, this is the definition of buy high, sell low. Like, I bought 3 minutes earlier for $10 higher. What? Which is probably why I sold, because I panicked. And I was like, this thing's tanking. And I do think it actually did tank. I think it got down to like $30. Oh, no, different contract. And so, like, the lowest price, okay, I'll give myself +1, literally. Like, but that's not what you don't want to get like one nib at the bottom from like scraping out the dregs of your portfolio to buy some little call. You want to be doing a massive size call right at the bottom. And so the next example will illustrate that. Now, this is a positive example, and it's positive for two reasons. One, it's the exact opposite of the previous example. This is me selling at the top and also buying at the top, but like definitely selling at the top. And part of the reason I knew to sell at the top was because I was tracking automatically, I was tracking automatically the highs and lows of this contract during the day. And so I got a little alert that we had just broken all-time highs, and like, why play with fire? Just freaking sell it. And I did this time, and that was great. And this like kind of like was a good one. And it looks like I had a couple others sold kind of like at good levels as well. I honestly find that I make my most money even in upward days. I don't know like why this is. Because I'm new to trading. Like previously, I was just buy and hold forever. Like kind of the idea of Warren Buffett, like I'm gonna hold these until I'm like 1,000 years old and set it and forget it. That was kind of my philosophy. Due to like a series of, I'll say, fortunate events, but also like some requirements, I have become more interested in seeing how much I can generate from being an active participant in the market. And the reason I'm so interested in that today is because we have like pretty baller tools. Look at this. Look at these Bollinger Bands. Like we got the 20-day moving average. We got the 9 easy EMA. What is that? Exponential or anyway, like we got the 9 period comparing to the 20 period with the Bollinger Bands. All that is giving us these really good signals. And with even all that, it still is so easy to make a mistake. But like, why am I so interested in this these days? Yeah, like I just think somewhere between AI and kind of like the new tech world that we're entering, where we're going to have humanoid robots doing all the work for us, I think there's tremendous opportunity in the markets. And honestly, this is so fun. It's so fun. Like I have to learn how to be successful at it because I want to keep doing it. And so let's go back and look at this trade. So this is a positive example, but still you can see like, why did I buy this put into open? Weird. I don't actually know why I did that. Doesn't really make any sense. But like I said, I had some like custom tooling that helped me identify that this was a good time to sell. And so then the natural question becomes like, well, how many other indicators can I add? How well informed can I be? In general, a principle for building wealth is just to be the first to know. If you're the first to know, you're the first to act. And that's where you're going to make the most money. Now, this is my worst trade of the day. I don't even want to show you. I'm just happy these aren't real numbers. But we got to do it so that we get better. Another great example of just like selling at the bottom. Oh my God. I mean, this was like into close and I was just like, I don't know what I was thinking, but I just closed it out. And so, now I have some good units here. No, see, this is it. Look, my highest units are always selling at the bottom and buying at the top. Like that's the exact opposite of what you want. And I wasn't even really so aware that I was doing this. It's really easy to mask bad trade behavior in an up market. And so that's kind of why I'm working on like diving into this data to discover my own behaviors. And like I said, I know what to do, but still, for whatever reason, I thought that this was a good price to buy or whatever. Had I held on a few minutes, I could have bought it for not half, but like, well, yeah, like almost half, a third. And so yeah, like if you sort by price, you don't want to see your top row being a sell, right? If you sort by price ascending, descending, you want it to be a sell. Let's see what descending is. Yeah, this is the exact opposite of what you want. And so like, hopefully you guys can like challenge your own behavior and kind of consider when you're getting an impulse feeling, like I want to buy, like just take a step back, scroll through the chart history, load up the 5-minute chart, load up the 1-day chart, just look where you're at. And maybe it is like a really good time to buy, then do it. But if you do that, also don't just put in one unit. That is another thing I'm discovering that makes all the difference is your quantity size, your order size, I mean, is really going to define the whole trade. It's the whole trade. I mean, it's timing and quantity, timing and size. And, you know, it's like with computer programming, you have O and N, you have like space and time, and we want to be efficient. The best software will be most efficient in both space and time. And so that's going to be true of trading as well. The best trades will have the highest size, the most space, deployed in the bottom whenever, that's the time element. That's the timing element. Is like, how do you know when it's the bottom? Well, you can't know. Nobody can know anything. Nobody can know anything. But you can look at the history. And so this would have been, I thought, like a good place to buy earlier. Wait, is this today? No, Friday. Was this the bottom? That was the bottom? Oh my God. So yeah, like let's look at this and try to reverse psychology and go through the day. So we're traders. We're all excited because it's Monday and the market's opening, and we're geared up. We're ready to go. And the market opens up, and it just has this massive come hither fucking signal from Tesla, like 244, let's go. But then we immediately crash down and go to 237, which is like a massive change. By the way, if you have contracts during that, vaporized. This is why options are so dangerous. But that's what the professionals use. And it's because they have tools and techniques and information, but also experience and behavior, and probably a lot of insider knowledge. But we don't even need that insider knowledge because we have the tape and we could just watch what they're doing. So going back, so we're like peak euphoria up here, just like it's a party, Tesla's gonna rip, let's go. And then sadness down here. Yeah, this actually is when I did my buy. So I think I ended up on Tesla through my trades on the day. The thing that wrecked. But like this is actually when I bought, and I kind of maintained that this wasn't a bad time to buy. This wasn't a bad time to buy. Like, look at that. You kind of like got this cross from the Bollinger Bands or whatever. That seems totally fair to me. I don't feel bad about that at all. What I feel bad about, I don't feel bad about, what I want to learn from and do better at is seeing that we're at 240 and not just capitalizing on that, because 240 is the current glass ceiling for Tesla. I know that. I know it is. Now, we've hit there in pre, we've hit there in post, but during trading hours, we haven't held 240 for quite some time. For more than like a second. So I knew that this ceiling was here, and I had a line there. And I did sell some calls, and I did buy some puts, and I think that's part of where I made money on those puts. And then I think I sold those puts actually right here. And so I could have actually maybe sold them for more, but I think I sold them there because I had that indicator from the previous put low. Okay, so we're trying to reverse psychology and go through the day and kind of like put ourselves back. At the beginning of the day, we don't know what's going to happen today. So we get down to this low point. I think that's a good time to buy. Then you get up to this 240, clearly the time to sell. Clearly. If you just look like, let's prove it, right? We can prove that it's clearly the time to sell. Boom, price history. Let's go back even more. So 240. First of all, look. We haven't been above 240. This doesn't count since we broke below it basically in, what is that, a week and a half ago? Not that long ago, but still, like, it's been a minute. And look at how these price channels are like, it's like every dollar. I mean, it is kind of psychological in that way where some of the price channels are just like at the 50 cent, at the dollar mark. That's where people participate because we all like, nice big round numbers. So we are going through, and this low back from here. No, that's not the day low, is it? Oh, okay, this low. So yeah, I was saying that this was a good time to buy. That can't be right. Where are we? Oh, okay, that's like, this is where we are today. Let's zoom in. I was saying that this was a good time to buy this low right here. And again, how would you have known that this might be a good time to buy? Well, it was our prior ceiling. Usually your prior resistance is now going to become your support, and that held true. until it didn't. Oh wait, that was the ceiling here, but you can see it's the same thing. Okay, so I'm a little bit not looking at the right chart. Let me just get it on the screen so I see. I like how we have this burning portfolio fire in the background. It's very, very soothing. So yeah, this candle here. Now, maybe somebody would look at that candle and be like, the body of this candle isn't very encouraging to me. I don't know enough about technical analysis to really judge that, but I'm just looking at it. I'm like, it would have been cooler to see like something more substantial in this range. And the only reason I'm thinking of that now is because we did break below it. And then when would this, how would you have known that this might have been a really good time to buy? Just look at the previous history. It was a prior point of resistance. And so none of this is like clockwork. You know, you're not going to like, it's just not that easy. It's not that easy psychologically. It's not that easy to time. It's not that easy to actually do. And you could just be wrong because like everything I'm just saying was completely proven false in the beginning of the morning at 7:58 a.m. So, or actually, really, it was proven wrong at 10:30 a.m. But like at 7:30, it's like, okay, the lows of the day are in. Now, where do we actually start the day? So yeah, but are you really going to get the lows of the day like just a little bit? No, the price wants to test lower. It wants to know what's down there. And there's something bringing it lower. It basically wants to know where the real buyers are at. And it's funny, you do see buying support at these different levels, probably because the previous day, a bunch of people set up like limit orders or programs or whatever at that price level. And so once you do get that low, if you're lucky enough to somehow figure out that that is the low, that's where you just let it go. Just fucking let it go. Now, manage your risk at the top again. Like, okay, so how would we have known to manage our risk here? Just look at the price history. We couldn't get above it multiple times in the recent history. And so like this was obviously another point of contention where things could go wrong. And so you might want to buy some puts or sell some calls or take your money out or whatever you do to hedge. And but then look at how bullish this is. We get this candle down here and it stops like pretty far above our previous low. And then it's just higher highs on the wicks all the way up. And like as soon as the bulls see like a couple of these candles, even though, oh wait, this is 5 minute. Yeah. So as soon as the bulls see a couple candles like with higher highs and lower lows, they're going to get activated. And they do get activated. So like back earlier in the day at 11, they get activated and we have this bull run all the way up to here. Now let's go to the 1 minute and see what the action actually looks like. Yeah, look at this. So you can see we have more of a like a crest here. And if I'm looking at this, I see that we have these green volume bars pushing up the price. And then we are peaking right above. We're trying to get into 240. And if we don't keep that run going, then the buyers get scared, they get exhausted, and they sell. Then they turn into sellers. And so, and then the sellers like smell the blood or whatever, or they just want to capitalize on the downside. Just like us, we want to capitalize on the downside as well. That's why I am such a believer in the future of all the companies that I buy puts against. I do that to try to like leverage the price action when things get too extended in one direction. And the reason I've only learned to do that is, or am trying to learn to do that, is because all of the times I've been burned in markets, all of it has been from not like from this situation of like buying high, selling low. Nobody wants to sell low. You get fucking liquidated. Like you want to obviously keep holding on to the stock forever. But like the trick with markets is, and I will say it until I learn how to do it, is we want to be buyers when everyone is a seller, right? We all know that. You want to do the opposite of what everyone is doing. And that's why it's so hard to do it, because like everyone is doing the main thing for a reason. So why are you going to do the opposite? And so if we want to be buyers when everyone is a seller, then everyone is selling because they're afraid. And they don't want to lose more money because they don't have enough to begin with. Their margins are too small, so they're getting out of the trade or whatever. Lots of reasons, but that might be one of them. And so the trick is, how are you going to be a buyer when everyone's a seller? You got to have a lot of money. You got to have your most money when the market is low. And maybe not most, but like you got to be able to leverage these price moves and do it like strategically and methodically, so that when you're getting like this nice green shaft all the way up and it's peaking like at 238, oh, it looks like it wants to be 240, isn't it just about to gap? No, it's not gonna gap. Why? Because of this. That was our prior. I didn't even look. I mean, I looked a little bit, but like I barely looked. Like, right, like anytime it's so cool to be able to retroactively go through charts, draw these lines, and just see how they match up. It's evidence that at these price levels, there are many market participants that create these different kind of like places of support and resistance, and that creates a ton of opportunity. Easier said than done. And so, yeah, like going back to the trades, what would have been nice is the exact opposite of this trade. You want to see, if you sort by price, you want to see all red at the top, right? And then you want to see all green down here. That's where we're buying. Why am I buying here? I'm buying here because it's going up and it feels like it's going to go up higher. That's what it feels like. I don't know like how to say it any other way. But like, if you just look at the freaking history, you can see, oh, we failed here. We failed here. We failed not here. Here we broke through. So that's pretty bullish. But then we get this giant shaft down. And so like, this is kind of interesting. I don't know what's going to happen tomorrow. I mean, we are really at this 238 price level. Has become like a new glass ceiling. 240 is like the ultimate glass ceiling. But again, earlier in the day, how would you have known to manage your risk here? Which I did, and I'm happy about. I just wish I would have done it more, but we all do, right? If it kept going up, I would be saying the exact opposite. The worst thing you can do, and I do this all the time, so like it's the worst thing you can do, is sell calls at the bottom. Like you lock yourself in a box basically, and you don't participate in the upside then. And so it's not just like as easy as managing your risk, but it is like, again, when people talk about like discipline, I don't think they're talking about like the discipline in like physical requirements or diet or exercise. They're talking about recognizing your own emotions are going to mislead you in trading. And to overcome that, like we have to have a lot of experience, a lot of tools, a lot of practice, a lot of time. And that's what we're here for. So, and I'm here, learning as we do. So yeah, going back to the tape, like we can wrap up on trades. I just want to show for my own psychology. Maybe there was one more. NVIDIA. What is this one? I think this actually was profitable. Yes, this was profitable. And the reason, this is another positive example, kind of. Not super positive, but you can see, this is why it was positive. You can see I'm getting my most units at the in a cell near the top. Near the top is not at the top. Like, but again, like, look at this idiot. He's buying at 7:48 a.m. We're barely into trading session. I don't mean to call myself that. I'm, that's not how I feel. But like, still, just look at this. Like, this is an impulsive buy. This is a FOMO buy. This is a bullshit. All these are bullshit buys. You want to know why? There hasn't been enough time in the day there hasn't been enough time in the day to build up any structure to have even the slightest clue what's going to happen next. Like, it's purely gambling at this point. And so at like the first couple of minutes of the day, later in the day, you're going to have some kind of history and some kind of like momentum, either to the upside or to the downside, to be able to like make better choices. But the worst thing you can do is buy at the top, right in the open, especially on NVIDIA, which is like still got its vol so high. Like the vol still gets crushed, I think probably for a couple more days still, a couple more sessions. But this was actually, it looks like a profitable trade, and it all worked out on this one. And the reason it all worked out is because I had my highest units like as sells. And that's another thing that you want. You want your highest units to be sells. Now, also buys, but like you want what you don't want is like a bunch of 1 units at the bottom of the price range. So like, let's see what it was. Okay, this is actually, see, this is why this trade worked out. So then I also get another high unit on the low of the day, which is great. And I'm happy about that. And it kind of counters what I just said, because this is still so early into trading. A half hour, you got a little bit of knowledge, I guess. And I do have these tools that tell me when I'm at the low. So maybe that was like how that happened. But that's why this trade worked out for me, is because my units were high both in my lowest purchase and in my highest sale. Well, not exemplified there. Let's go to here. Yes. So yeah, that's where you want your units to line up. So that's a positive example. And so I had 2 good ones. I got NVIDIA calls and Tesla puts. And you want to know why I did both of those? Let's go to the tape. So like I said earlier, let's go to the flow. Earlier, Tesla was in this right column. And it's Palantir shouldn't be here. This is all sold calls. Like, look, I'll show you the action on Palantir real quick, just because it's like, yeah, that's Palantir. It's freaking bullish. But yeah, going back to the flow. So Tesla was in this right column, and it was getting put hard, and so we were going with the flow. And like my 2 best trades of the day came from not spitting into the wind. Like I could have said like, oh, Tesla, you should never put Tesla. I would never do, like, no, just like watch what the smart money is doing and recognize that what they're doing, they're only doing it for like 5 minutes at a time. Maybe they're going long here and there, but I think with the options that I'm interested in learning how to use are the ones that are most frequently traded are called like, they're just expiring recent, like this week, and they're more volatile. The days to expiration is less than 7. Maybe, I don't even know if that's the right way to say it, but that's how I'm going to say it. So if we look today, let's see what the highest premium is on the tape. What's the highest premium? Get out of here. ETFs, we don't need to see any of that bullshit. Let's see who got called or put today. 2.9, Baba, don't care. Tesla, 2.1 premium into Tesla. When did it come in? Is that close? That looks like it's into close. This is also another interesting thing to do, is see what people do in the open and the close. So immediately getting like, yeah, there's pretty bullish action today. And so into close, what's happening? NVIDIA is getting called. KRE's getting called. What else? Apple's getting put. Google's getting called. You guys are going to put down Apple? That's crazy. I want to look back at that Tesla premium. So when did that come in? I mean, that's definitely later in the session, right? I don't know what time closes. I think it's 4 on this time zone or whatever. Disney, like it's interesting to see what people do at the open and the close. I think that really sets up the next trading session. So yeah, tons of premium going into Nvidia. Pretty good premium going into Tesla. But if you look at the actual charts for these guys, like look at the bull meter on Nvidia. That is where you want to get the green all the way to the right. Like you want it to just explode out of there. But then you look at Tesla, pretty neutral actually, and definitely was bearish earlier in the session. And so like instead of like pretending to be able to like divine the Brownian motion of markets, like just look at what the people with the most information and the most money are doing live. And it's not as easy as just following them into these trades, but it's definitely dumb to bet against them and consistently, unless you have a really good reason. The reason I tell you that is because I spent like a ridiculous amount of time, energy, effort wasted by betting against what was right in front of my eyes, which is the sentiment. So don't be a bull when everyone's a bear. There's no reason to do that. There's just no reason for that. And don't be a bear when everyone is a bull. Look at what people are buying and selling. Let that influence your trades. Doesn't mean that you have to do what they do. Just means that the wrong day to go and deploy a bunch of puts into Nvidia, unless you did it early in the morning, but this was the wrong day to do that. And I guarantee if we look at the chart, it's going to reflect that. I don't guarantee it, but I would imagine. So I don't have the chart. Like I didn't look at Nvidia a ton today. Nvidia, let's see what they're up to. So 468, so still lower pretty far than, okay, that's pretty good. So where do we open? Oh, geez. Let's go back a little bit more. Oh, damn. Nvidia had a good day. Okay, so Nvidia, what happens? We immediately tank down to 449. Let's go look at the tape on Nvidia and see what people were doing around those levels. So time, this is like first thing right in the morning. And what are they doing? They're buying a ton of calls, right? And so like right into open, there's some calls and puts or whatever. And then look at this wave. Does that line up with the chart? Wrong window. Does that line up? About 30 minutes. And yeah, that lines up. So right here, if you happen to be watching the tape, what you would see is, right? I'm not crazy. Look at the times. 9:30 is when we opened. So around a half hour later, around 10, we're going to see this wave of calls for the riskiest bets on the market above the money. 500 grand, 500 grand, 250 grand, 500 grand, like order size, timing. These guys are pros. They're freaking pros. We want to be pros. And I want to be a pro. And so like, look at where they got into Nvidia today, 449. Now, I doubt they're still holding it. I bet they sold it right here and then got in again here and sold it here and got in again here and sold it here or whatever. Who knows? But like this was the time to buy Nvidia, was this morning, early into the session, into the weakness. And then it just was a massive bull run for the rest of the day. Wow. And so how would you have known to participate in there? Well, just by watching the tape. And I long term, I want to do the show live so we can talk about this stuff live together and we can reason about what the market conditions are. And of course, do some degenerate gambling and everything. But like, that's why you should share this video, like and subscribe and do all those things so that we can keep the party going, because this show has to keep the lights on eventually. Otherwise, we can't keep producing it. So nothing to focus on that for now. But like just going back to Nvidia. Oh, yeah. So I was telling you this because I was like, if you wanted to be a bear on Nvidia, which there's plenty of reasons to, this was just the wrong day to do it. You got to be a bear on Nvidia when people are being a bear on Nvidia. You can't be a bear on Nvidia when the bull flag is all the way to the right. And so yeah. So yeah, we'll wrap up our show there today. I hope you guys learned something from my mistakes as usual. I'd like to get a couple of wins here to, make up for that. But we don't want to buy high, sell low. We want to buy low and sell high. Here's an example of doing both, but actually I did get a good one there. And we're going to keep going with the flow and learning from these insiders. Yeah, like I would love to hear from anyone how they have corrected their own trading psychology. And when you feel that impetus to purchase, you're like at the top for the days, where does that come from? Why don't we feel the opposite? Why don't we feel, oh, this is a great time to sell? Because the party's always going to keep going. So we'll keep it going tomorrow. Thank you guys. Have a good night.